What's happening in the Southern California real estate market in May of 2024? My name is Kyle Whissel with Whissel Realty Group, and today I want to talk to you a little bit about what's happening today, the things the media is going to report in a few months from now in the market here in Southern California. Now, when we look at these things, I have an econ degree from UCSD. I am all about tracking leading indicators, not lagging indicators. Most of what you hear from the media, things like median sold price and days on market, all these terms that they hear are all related to sold properties, which means things that happened in the past. But let's talk about the present and also the future, because that's what you need to know if you're watching this video, because you're probably making a decision on buying or selling. So what do you need to know now that the media is going to talk about a few months from now? Three primary data points, or I guess technically four primary data points that I like to look at, but most of them are all driven off of one data point, and that's mortgage rates. Mortgage rates are so important in this real estate world, more so today than I think they've ever been. I've done this for 20 years now. I've never seen a market have as much volatility as it has today based off of mortgage rates. When mortgage rates go up, the market slows down. When mortgage rates go down, the market heats up. So where are we at right now in the beginning of May of 2024? Well, rates have gone up a lot in the past month or so. So as rates have gone up, we've seen rates tick up into the mid, even the high 7%, inching up closer to that 8% range. Well, as that's happened, we've started to see things pull back a little bit in the market. So the three data points that are triggered by mortgage rates are, number one, median list price, not median sold price, median list price, because here's the reality of it. A home has to get listed before it can sell. So if we know that the list price happens before the sold price, let's track the earliest indicator we can, and that's median list price. So we like to look at this median list price because that is a good foreshadowing of what's to come in the future. And that median list price, we saw that kind of falling toward the tail end of last year. We saw that flatten out in the first quarter of this year. And now as we're here midway through the second quarter of 2024, we're starting to see that median list price go in an upward trajectory, which is typically a good sign that you're seeing values increase, which the media is just starting to kind of report this, but 2-3 months from now, when they get caught up to things, you're gonna see there's actually been a lot of movement in prices. So median list price still trending in an upward trajectory, which is a great thing. That's a good indicator of values going up. Second thing we like to look at is how many of those homes that are listed have had to have a price decrease on them in order to sell. We see that typically about a third of homes that hit the market will have a price decrease before they sell. This has been trending in a downward direction for a while. So what happens if you have the median list prices going up and the number of decreases going down simultaneously? That's another really good indicator of the market going up. Well, these high rates have slowed things now. So we're starting to see those decreases flatten out or maybe even come up a little bit, which is kind of what you would expect, right? If rates go up, you might have to take some decreases in order to get your home sold because buyers are more rate sensitive than they've ever been before. So we're definitely starting to see that flatten out or maybe even increase on the number of homes that have had a decrease in their price. The third thing that we like to look at is what's called the Market Action Index. This one I like the most because it takes two valuable data points and combines them together. This is a relation between the rate of sale, how many homes are selling, and the number of homes for sale, or the inventory. So it's rate of sale divided by inventory gives us a market action index. As that is higher and going in upward trajectory, that means their market is moving in a positive direction. Homes are coming on the market, they're getting sold. They're coming on the market, they're getting sold quickly. When you start to see that trend in a downward trajectory, that means homes are sitting a little bit longer before they sell. So the rate of sale in relation to the number of homes for sale is slowing. And that's what we're starting to see right now. So as these rates sit higher, we expect market action index to go down, and we're starting to see that trend line where that's actually starting to slow down a little bit, which all makes sense, right? It's all rate driven. So where do we see rates going from here? Because ultimately where the market goes is going to be very driven by where rates go. Well, in the first week of March, we actually got some really good data coming out of the Fed and some of the things that they're doing, as well as the jobs reports. Now this is what's weird, a bad jobs report is good for rates. So if there's not a lot of jobs created and unemployment goes up and wages don't go up much, that's good for rates. I know it sounds weird that you're kind of rooting for bad employment news to get better rates. That's just the nature of the beast. So we actually saw that in the beginning of May. And now we have a couple big inflation reports coming up. PCE, which is personal consumption expenditure, and CPI, consumer price index. If we can start to see those trend in the right direction, coming down, those are the two primary metrics we use to track inflation. If we could see both of those come down, I think you'll see the rates come down. And if the rates come down, I think market starts to turn up a little bit sharper. So keep an eye on those two reports, CPI and PCE. If we can see those numbers come in at or below the expectations, high probability you'll see rates come down, market gets red hot. If those numbers come in higher than expectations, well, you'll probably see the rates continue to stay higher for longer. So keep an eye on those as we go through the month of May to give you some better direction. Obviously, follow us on social, or just reach out to our team. We'll keep you updated on all those numbers. So if you're thinking about buying, selling, we're kind of in this more neutral, flat market, which is right. There's not a lot of risk in these flat markets. So whether you're buying, selling, we'd love to sit down, have a consultation. We can look a little bit more at your personal situation, help you make the right decision for you and for your family. Give us a call, shoot us a text at the number down below. We'll sit down for that consultation and point you in the right direction. I'm Kyle Whissel with Whissel Realty Group. Thanks for tuning in.